I don't know if you knew this, Stephen, but last year we had a pyramid scheme go up in flames. A lot of people lost a lot of money. And there were some of my colleagues, they laughed at it. And I said, well, you can't laugh because everybody is just trying to get into investing and they need proper guidance. What I told somebody? I said, the fact that so many people invested in a pyramid scheme,
There's appetite.
It meant that there's appetite, but it meant that we're, as practitioners, we're not doing a better job amplifying the options that we have.
So here's what keeps me up at night and what also excites me. As a country, we are one hurricane, one global shock away from economic pain and financial hardship. The vulnerability is real. While we cannot escape our geography and are susceptible to external environment, we do have agency in charting our own future. We do have a say in the quality of lives we live and what we leave for the next generation. When young people in Saint Lucia invest even $50 a month, they are not just building their personal wealth, they are building national resilience. They are becoming stakeholders in something bigger than themselves. And when enough people do that, capital formation takes place in our country, in our region. Businesses get funded, jobs get created, and we stop placing ourselves at the mercy of forces outside of our control. The financial markets exist to do exactly that, to take the savings of ordinary people and put it into productive enterprises and sectors. This is not a concept reserved for Wall Street or for the rich. It is for you too. But we have to invite people and explain the opportunity and give guidance on the risks and rewards of investing, particularly in our own region. Some of you are already making bets, taking risks on crypto, on side hustles, on your idea. We just need to create a better structured, regulated, transparent vehicle to channel that positive energy. Financial inclusion is not charity. It is the smartest economic strategy that we can pursue as a country. Welcome to the 1461 podcast.
This podcast is brought to you by IBS, Harbor Club, Tropical Solar, and 1461 Enterprise, distributors of the world's best coffees.
Welcome to another episode of the 1461 podcast. Today we have a very special guest, Mr. Omar Burch-Smith, the head of the UTC Global Balance Fund. Welcome to the 1461 podcast.
Thanks for having me, Stephen. Pleasure to be here.
Very good. I've seen you doing really interesting things in the financial sector in Saint Lucia, some really important things. Walk us through to your own journey to become the head of the UTC Global Balance Fund and what triggered your initial interest in the financial services sector.
Yeah, so, growing up as a young man, my passion was really aviation. Wanted to be a pilot. Then post St. Mary's College, went over to Saint Lucia, thought of doing law. Once that was done, went to work at First National Bank. Spent about a year there. I got promoted within that year quite early from a teller to recoveries officer. So I was a recoveries officer at the tender age of 20.
Oh, wow.
And something clicked in me that for me to excel, I really needed to take this further with my education, right? I had never done any business subjects at St. Mary's or Saint Lucia, and then I went into finance in the year 2005, thereabout. Did a first degree and a master's. I was fortunate, because part of my story is luck. I was fortunate I would have gained employment with the Bank of Saint Lucia, again at a fairly young age in a fairly senior role, leveraging my ability to manage relationships and also my technical capacity. Fresh off a master's, a lot of these things obviously were top of mind, fresh in my head. So I applied that to excel in that role.
What role was that, if I may ask?
So I was a corporate relationship manager. When I started, the role was called corporate banking executive, and then it changed to corporate relationship manager. So what that really meant in short was I had very little lending experience, but I had a loan portfolio of about 100 million to manage.
Wow.
So you manage the existing credits, but you also bring in the new credits. And it's really entities, large clients all over Saint Lucia, right? So I understood from an early age the importance of relationships because these people had to trust you. They didn't see, well, who's this young man, with very little lending experience. What they saw was somebody who took the time to understand their business, tried to find solutions, and put forward proposals backed by sound technical analysis that would allow for their expansion. So I learned quite a bit in those formative years at the bank, working with some stalwarts, some stalwarts at the time. I learned a lot from them, especially on the human side. And that was the lending part of it, right? That was the lending part of it. And I still tell people, boy, I feel like at my core, I'm still a passionate lender,
Banker.
still a passionate corporate banker. But then the opportunity came circa 2016, where First Citizens had an opening for business development manager. And that moved me away from lending into securities business, right? And when I say securities, investment securities, right? Particularly on the brokerage side. So representing sellers and buyers, right? Which effectively what creates the capital markets and being a central cog in there. Similarly, like at Bank of Saint Lucia, went into that business with zero securities experience beyond the technical book learning that I had. Obviously, that would have formed part of my curriculum as a student, But again, leverage my ability with relationships, with teams, managing large, complex transactions, and finding success there. And then out of the blue, the UTC opportunity came knocking, really out of the blue. And when we sat down and really went through what it is that UTC was trying to do, I understood the importance of having this. But there was some I would say some fear, right? Because I had a 30,000-foot understanding of the securities market in Saint Lucia and the wider region, and I knew it would be challenging. So again, walked into that with very little experience in the security side of things. So I would say so far my journey has always been I've taken a chance, I've believed in myself, I've leveraged the skills that I have, the core competencies, backed by the technical competencies, and really just applied and put in the work to try to bring it to try to gain success in those fields.
If you were to reflect and think of one of those roles, which one of those roles do you think, or would you credit as being the most important in shaping you as a leader now?
Yeah, so Bank of Saint Lucia role, and obviously I'm starting postgraduate, right? Because I would have worked previously, as I mentioned. Bank of Saint Lucia role really taught me the value of understanding your people, understanding what drives them, what motivates them, what challenges that they may have. The gentleman that I referred to earlier who would have shepherded me at Bank of Saint Lucia, they were empaths, okay? So they believed in people and they always tried to do what was in the best interest of their people, right? So that sort of shaped my empath philosophy to begin with. Moving on to First Citizens, I would say I got a greater exposure to broader structure, organizational structure, governance, and understanding the need to have certain things in place for a business to function correctly. Not saying that Bank of Saint Lucia didn't have those, but obviously being in a more senior role, it sort of brought it home. And then obviously now with UTC, that development has continued. So I would say Bank of Saint Lucia for sure, working in these early days. Because remember, I came from school. You know, when you're 24, 25, you feel like you know everything. but I always enjoyed listening to the stories and the experiences
The stalwarts.
of the stalwarts who would have been in banking in the 70s and then in the 80s. Because remember, a lot of these, well, I shouldn't say remember, but a lot of these gentlemen came from like your Barclays and your CIBCs, and then they went into the NCB
Exactly.
that was formed, in the early 80s. And they would have brought that experience over there. So I've always loved hearing people's stories, especially as a younger professional. People always say, boy, you have an old soul. I liked discussing world events and cricket. And so it was always easy to converse with those folks. But just understanding their philosophy and sort of more or less listening to the mistakes that they made, trying to learn from them in that respect, that was really helpful.
But you have a lot of passion. I mean, how do you sustain that passion with all the responsibility you have? When you're excited about a new role, you're excited about it, but the responsibility which comes with it sometimes dulls that passion. You start thinking more practically of how do you grow year on year? What is the return that you're generating for your investors? How do you sustain that passion based on your responsibility?
Well, sustaining passion in any professional field is actually enjoying the work that you do. And the thing about it is, again, if I go back to those early days, my challenge was getting something from an idea into a boardroom, into actual fruition. A client comes to you and they say, hey, Omar, I want to build a 40,000 square foot warehouse. And I have to take that from his brain all the way to a 40,000 foot warehouse, right? Similarly, at First Citizens, a government says we need to raise X amount of money for this fiscal year. And you say, well, how do we go about doing it? How do you motivate teams? So it's actually seeing something germinate from an idea into full fruition. That's what really drives
So
the passion. Results, but tangible results. All right, tangible results. There's a lot of discussion now, Stephen, around AI and what AI will replace in terms of the job market. And there are a couple. It's a podcaster that I listen to all the time, and his thinking is always that if you sit down and you ask yourself, am I creating value in my employ? From Monday to Friday, from January to December, have I created value and do I continue to create value? If the answer is yes, then chances are you shouldn't be worried. So for someone in a professional field, and I don't want to take the conversation to AI, but if it is that you are creating value and you're seeing
value
creation and the merits of your work, then it's easy for that to drive your passion. Yeah.
Now, we're talking about creating value, which is also very important. But we also, Saint Lucia has not typically been seen as a place for value creation in the equity and securities markets. Typically, it was Trinidad, Jamaica, Barbados. With your responsibility as being the head of this mutual fund, do you think there's additional pressure for you to overperform, to not only prove to yourself, but to ensure that your regional peers could see that we are punching above our weight and we are delivering value, creating value?
Yeah, there is pressure to perform. So when we launched GBFL, it was the first mutual fund, and it sort of brought heightened awareness to the possibilities of having something to invest in. But the reality is the Eastern Caribbean securities market, which covers all 8 islands, including Saint Lucia. Saint Lucia is the largest player, came into existence in 2001. So it has a 25-year history, but the majority of Saint Lucians don't know anything about it, right? Now, when you take a step back and you say, well, what has the ECSM done? The ECSM has created great value in Saint Lucia already, because embedded within the ECSM is the RGSM, the Regional Government Securities Market. And that's where our government raises, on average.
But for the sovereigns, we've done well, but for retail investors, we haven't, because the markets are very shallow, no?
Correct. And that's been the challenge. And that's the bridge that we're trying to create now. We're trying to bridge that gap where not only do large institutions or governments benefit, but now retail investors can start benefiting from investments as well. So when we talk about the issue of value creation, we still have a long way to go in Saint Lucia, right? We still have a very long way to go in Saint Lucia in terms of value creation and what the potential is in the capital markets.
Both for retail and institutional and sovereigns.
Both retail and institutional and sovereigns. I would say the sovereigns have done quite well. The sovereigns have done quite well. The RGSM is fairly robust. I think there's probably about 7 billion across the different territories trading in the RGSM right now.
Very good.
So that's fairly robust.
So we're going to take a quick break here. And when we come back, we'll dive a little deeper into financial and securities opportunities for the average Saint Lucian. See you after the break.
Coming up after the break, more with our guest.
Experience the benefits of a tropical solar water heating system. Call 453-1868 in Castries or 454-6344 in Beaufort.
Welcome back. Before we broke, Omar, you were discussing value creation. I think we were still in the middle of that conversation when we broke. Do you want to add some more to that?
Yeah, so we were talking about creating value, and it's something that the capital markets globally, that's what they're really designed to do, right? A capital market is basically a marketplace where the folks with the capital find a way to put it in the hands of the innovators, the folks who have ideas, right? When we think of disruption and that disruption that has driven economic growth globally, there's always a strong capital market that supports it, right? If you think of our region where 1 in 25 people are invested in the capital markets, that's one problem. And right now we're aiming, when I say we, I'm talking about players within the financial space, along with the central bank, they're aiming to get that from 1 in 25 to 1 out of 5, so 20%.
20%.
If you contextualize that with the US, it's 3 out of 5. Okay, 60% of citizens are involved in the markets, right?
But in terms of innovators, typically that's the private markets rather than the public markets at early stage.
Right, so that's where I'm getting to, because the private markets don't exist for us. But here's what we also have. Here's the opportunity we also have. Across the Eastern Caribbean, we're looking at almost 30 billion in excess deposits.
So we have excess liquidity.
Excess liquidity, almost 30 billion. In Saint Lucia alone, that number is about 5 billion.
Wow.
Right? But here's what we also have in Saint Lucia. We also have young creators. We also have innovators. We have companies that are up and coming that are in need of capital. And I'm very pleased in Saint Lucia now that we have the Youth Economy Agency that provides grant funding. But what we also need is that ecosystem now that will support private capital markets. Okay, so your private equity, your private debt, your venture capital. And that's where you'll start to see the real value drivers.
But the ecosystem, I mean, having access to capital is, of course, fundamental and important.
Yep.
But you have to have also the academic educational institutions, the regulatory framework. You have to have sort of, digital sandboxes which would promote and support innovation. How is the ecosystem developing to support those outcomes that you're describing?
Right. So legislatively, there are some gaps, right? Because if you take it from the investor perspective, right? What protections are in place for you as an investor beyond what exists in the current laws and regulations, right? How do you create now an ecosystem whereby you have collective monitoring, collective compliance, collective due diligence, collective reporting, accounting, and that sort of thing? India is a very good use case where you had the development of what are known as angel syndicates. Okay, so that's where one large entity, which usually has a lot of professional capacity, technical capacity, they have capital as well, but what they also do is they bring several angel investors now to the fore, right? And the syndicate manages that process. So angel syndicates exploded just after the pandemic in India. And you've had a creation of almost 200 new businesses across India as a result of angel syndicates, right? And these are thriving businesses. Some of them have gone public. So what we're saying is that in our region, you have holders of the capital, vis-a-vis depositors, earning a 2%.
You could get...
Whereas there's money, there's opportunity out there, not for all of it, obviously, because you need money in the banking system. You have that opportunity now to create real value. We're not talking 2% or 10%. We're talking about several times. Okay? And everybody wins. The entrepreneurs win.
You could 10x those outcomes. Question though, I wanted us to, I think we're traveling at about 30,000 feet. I want us to explain to the average Saint Lucian who is probably has have a little kakada in the bank, how they can benefit from those opportunities and why it's not that complex or difficult. I want you to also, if you can, touch on why having so much liquidity in the bank is a missed opportunity for that person.
Yeah, so first things first, if you do have excess liquidity in the bank, you're probably doing okay, right? That's number one. However, if it is that you're going to rely on that bank deposit, you're robbing yourself because your money every year gets, the value of your money depreciates because of inflation, all right? Inflation in our region averages about 5%.
Wow.
Savings rates are about 2%. Every $100 you have in the bank is losing $3 every year, okay? Because prices go up by $5, but you're only getting $2 on your $100, all right? If you have 1,000, you're looking at $30. Now, accessing a simple investment like a mutual fund, like the UTC Global Balance Fund, or even a treasury bill, a Government of Saint Lucia treasury bill, or even a Government of Saint Lucia bond, right? Or a repurchase agreement, or some commercial paper. Anything that's close to that rate of inflation will allow you to maintain the value of your money. And you might say, well, my money has been in the bank and I'm still okay. But if you think of the long term, Stephen, and that $3 being depreciated every year, while you're still employed and earning income, that's fine. Once you've stopped or once you've retired, then that's a problem. That's a problem.
Now, we'll go into the returns that UTC provide a little later, but for now, I'm wondering whether or not, we've spoken at length about regional integration. We've spoken at length about how the regional securities exchanges and regulation could become more consolidated. Is there an opportunity to ensure that those investments which are being made, if there's a consolidated market, that there is more skill and there's more delta to be earned by the investor?
Okay, and as from the perspective of a consolidated market, you're thinking beyond the Eastern Caribbean.
I'm thinking Guyana, Barbados,
right,
Trinidad, Jamaica.
Yeah, so it's a conversation that's ongoing. In 2007, there was a serious push to consolidate the exchanges, but there wasn't alignment on whose platform that would be used, right? If you think of Saint Lucia, we're 180,000 strong. You go OECS, we're looking at 650, and then you go to broader CARICOM, English-speaking CARICOM at least, then you add 6 million, right? So that gives you some level of scales. The complexity in ensuring that there's harmonized legislation across several independent territories might be a bit difficult, but I think at the institutional level, there is definitely more opportunity for cross-listing of securities, more seamless, the ability to list in multiple territories, but also the ability for brokers to create MOUs, and brokers are those who actually provide access to the investments, create MOUs around the know your customer compliance regulations that would allow clients to access investments across different territories through sort of one centralized agreement. I think there is some opportunity there. In 2022, I think at the Trinidad and Tobago Stock Exchange Conference, an MOU was signed for a single index. So what that meant was, and what an index does is it tracks the value of the securities that are trading.
An ETF like.
Right? So it wasn't really meant to be an ETF, but just an index that tracks the value, right? So they would do one for across the OECS, Trinidad, Barbados, and Jamaica, right? And I'm not too sure if the Bahamas had signed on as well. And that would give a sense, that would be a token step towards that. Because what you are saying is correct. For us to really maximize that value, both from the value creation side as well as from the capital side, you need scale. And maybe the 600,000 in the OECS might not be enough. So accessing that 6 million, where somebody in Kingston, Jamaica, can invest in an angel syndicate in Guyana, and somebody sitting down in Arima in Trinidad can look at some opportunities in the Bahamas because there's a seamless way to do so. I think that's the best way to go.
Now, there are two problems as I see it. The first one is perhaps regulatory inertia, where the regulators and the government have not been able to make sufficient progress. And the second thing is lack of a enough educated investor class. And when I say investor class, I'm talking about from the service worker at the sort of operational level to the top CEO. How do you bridge that gap? How do you create an awareness, both in terms of the need for us to work more closely and work towards consolidation, and ensuring that the average person out there is aware of the opportunity so that they could participate?
Well, so I'll touch on the regulators quickly. In the Eastern Caribbean, for instance, where we have harmonized legislation, right? There's one Securities Act, there's one Investment Funds Bill, there's one Banking Act. You do find that the regulators do try to stay as current as possible, right? The difficulty, though, is while we have one piece of legislation for these 8 islands, they have to pass in 8 parliaments, right? So take, for instance, the Securities Act. There's been a draft revised one since 2020, and it's been stuck in a couple parliaments, right? So that we're hoping that we could get that out this year. So I think locally, and when I say locally, I'm talking Eastern Caribbean, we do have active regulators who aim to be nimble, right? On the education front, you touched on something that's so critical, Stephen. We at UTC spend more time educating, teaching, than actual selling of our products.
It's important, yeah.
Because we recognize that there's a gap. And we're not only teaching people about investments, we go back to the bare bones and have discussions around financial literacy. Discussions that really should have happened when me and you were in school, right? There is a gap in the curriculum where certain life skills need to be introduced, and financial literacy is one of them, okay? Education, financial education, and I'll share a personal story. I gave you my career trajectory where I did a master's in finance. I went into a senior role from day one, and I've been in senior roles ever since. But I had to take a step back.
All personal finance.
And learn some personal finance for myself.
Yeah.
You understand? So if I, as a professional and as a graduate for finance degree, had to take the step back, there's no way I can look down on the man on the street and say, how come you don't know this? Now, to our credit, in Saint Lucia and across the Eastern Caribbean, we have a rich savings culture. And our parents teach us to save very early. So that sort of helps because it teaches us to be frugal, teaches us to understand that we need to put something away for a rainy day. So having that muscle memory and building that cadence, those good habits, that's good. But in terms of the education and the financial literacy, there's a large gap that needs to be filled. And you hit the nail on the head. From the grassroots level all the way to the boardroom.
Thank you so much for this. We'll be right back after this quick commercial break.
Coming up after the break, more with our guest.
Awa, Pamwe, too cold. Alexa, where can I find a solar water heater?
Let me find out. I'm only seeing one, Tropical Solar. They have the best solar water heater, providing hot water, rain or shine.
Is there one big enough for my entire family?
Actually, Tropical Solar offers 35 to 85 gallon systems, perfect for any home.
How quickly can I get one?
The hot water system is installed within 24 to 48 hours of purchase. They are located in View Fort, Castries, and Rosie Lay.
Thanks, Alexa. Jale.
Now, Omar, UTC, the Global Balance Fund, I believe, was the first mutual fund on offer in Saint Lucia and the OECS. Walk the average viewer who's not very savvy on different funds and different investment options. Walk us through what a mutual fund is and how they could take advantage of it.
Yeah, so legislation for mutual funds, before I explain what a mutual fund is, it existed since 2001.
Oh, wow.
So at the same time the Eastern Caribbean securities market came into being, there was legislation for mutual funds, right, or collective investment schemes. However, the legislation is a bit difficult to interpret in some parts, and we were never able to bring one to the fore, right? So in 2023, when we launched, it was a crystallization of a vision for the Eastern Caribbean securities market, right? Whereby we would have the securities exchange, you would have active intermediaries, and now you have this mutual fund. Mutual funds, Stephen, are simply just an investment vehicle that pools monies of a multitude of investors, many investors, in one fund. And that fund is managed professionally to meet a stated objective, right? So what that says is, Stephen, you have $100, I have $100, and each of us may want to do our own investing, right? You might want to buy some shares in Facebook. I might want to buy some US bonds or some Saint Lucia bonds. But here's the thing. We don't know where to get started. We don't know how to go about monitoring our investment portfolio. We're sort of nervous. We've heard about this, we want to do it, but we just don't know how to go about it. What the mutual fund allows investors to do now is invest in a fund that does all that work for you, okay? So my $100 has gone into the fund, your $100 has gone into the fund. Let's say 20 other listeners, their $100 has gone into the fund. We now have $2,200 in a mutual fund that is managed professionally, right? Regulated by a local regulator, so everything is above board. And that fund now makes investment decisions on behalf of the fund. They structure the portfolio to manage risk and generate return. They do all the monitoring of the assets in the portfolio. We know when to buy, we know when to sell. So you're not only a part of a community that's like-minded in terms of a desired outcome, you're also benefiting from professional fund management, benefiting from the oversight of a regulator, benefiting from the protection of a custodian. These things are in the law.
So you're benefiting from skill, you're benefiting from management, and you're benefiting from spreading risk across different asset classes.
Yes, because the other beautiful thing about a mutual fund, and what we do is no different than any other mutual fund. Diversification is the core tenant, the key principle, the number one thing that we do.
And how's your fund balance between like equities, government securities, and other asset classes?
So our fund is what is known as a growth and income fund, where the primary focus is growth. So we get that from investing in stocks or equities, which provide a certain level of return. And then that's balanced off because the higher the rate of return, the higher the risk, of course. So there is an elevated level of risk when you invest in stocks. That's balanced off by investments in fixed income securities, right? Or your bonds. Yeah. So it's a typical 60-40 split, 60% on the equity or the growth side and 40% on the income side.
I see you have, since 2023, I believe, your assets under management has grown by 70% within a relatively short period of time. What do you attribute to that growth in your assets under management? Increased confidence in your products, or is the mindset shifting? And also that 70% growth, is that on the retail side, or is that also do you participate in sovereigns?
So the growth has really been driven by, yes, the mindset is shifting. So that's helped the growth, right? Stephen, I'll give you a story, right? When when I was at First Citizens, and like I said, dealing in capital markets, dealing in large transactions, raising billions of dollars for governments and private sector institutions, that was what I was accustomed to. Bank of Saint Lucia, same thing, right? Loan portfolio of 100 plus million. I go to UTC, and on the first day, I'm going through some information, and it says here that going through the prospectus, and it says the minimum investment amount is 100 US.
Oh, wow.
I'm like, what? 100 US, you know? And it began, that's when my mindset started to shift. That, you know,
Make it accessible to the person,
Exactly.
average person.
exactly.
So the listener out there, if you have 100 US and you want to start by participating in those mutual funds where you'll have professional fund management, professionals who look after risks and the opportunities for you, then you have a good option with UTC.
Yeah. So what we've seen is that a number of people that weren't in the capital markets, they're now on board.
Good stuff.
They come in, they get the information that they need, they recognize how this could be beneficial to them, and they've signed up. So we've seen a lot of that. We've seen sophisticated investors who are already in the markets come in, and we've also seen some institutions.
So this is all on the retail side, people coming in.
The number of clients is primary retail, but obviously the volume is driven by corporate clients. Yeah.
So I realized in 2023, maybe 2024, you returned on capital 12.4, 12.5%.
12.76%. Yeah.
But that's outstanding. I mean, in an environment where the average person gets 2 or 3% on a normal bank deposit,
Yep.
to return 12.5, almost 13% on an annualized basis is pretty strong. What do you attribute to those outcomes?
Yeah, so it's really a testament to our capacity to navigate the markets, make good investment decisions, capitalize on opportunities. Like I said, what we do is not magical. We invest in stocks on international markets. We invest in fixed income securities on international and regional markets.
What's your balance between international and regional?
International, regional, it's about 95% international.
And do you work with other, let's say, brokers externally, or you do everything yourself?
We do everything. All the asset management is done in-house.
Wow.
Yeah, all the asset management is done in-house. So to go back to your question about the returns, the markets did well that year. So we would have done well that year, right? But it's not as simple as just replicating the market, because that's not what you're paying to be a part of a mutual fund for. You expect us to perform in a certain way that drives return, but also manages your risk. So one of the first things I always remind listeners, or I always remind people when I'm talking to them, past performance is no
Indicator of future.
indicator of the future.
But the conditions are different. People say that it's sort of like using Alan Greenspan's term irrational exuberance. People are saying that AI is driving a lot of irrational valuations.
Yep.
And how do you take that information on board, look at some of the growth in some of the AI startups, and how do you ensure that you could benefit from those opportunities, but also safeguarding your investors from the downside risk associated with those new entrants into the market?
Right. So it's really underpinned by two key factors. So first of all, our investment philosophy. We take a top-down approach, right? So that's our core approach. You take a look at the macroeconomic, and then you drill all the way down to what securities you're going to buy. So we take a fundamental approach. If you look at some of the companies that we're invested in, because in America, and this changed only last week, but in the North American markets, you had to report on your earnings quarterly, right? What we've seen is that companies are consistently beating earnings, right? So it suggests that even though there's massive capital spend in terms of AI, they're beating earnings expectations. So the fundamentals of these companies that we're investing in. And when I say companies, it's stuff that you know, stuff everybody knows. Microsoft, Apple, Netflix, stuff you're familiar with.
But that's connected to the return on the equity market. People's 401ks, people are feeling because of the market.
Exactly.
That so their willingness to spend is higher, but it's maybe not driven by the economic fundamentals. It's sentiment.
Right. It's sentiment. But what I'm saying is the fundamental of the companies, because we have to look at that. We look at performance. We don't speculate. So the companies are doing well. The earnings reports are beating estimates, right? Which means they're more profits than estimated, that were estimated. So these are the kinds of companies that we're in.
So
Now,
you don't think we're in a bubble? There's no bubble. There's no AI bubble as far as you're concerned.
the data suggests that there are some linkages to previous bubbles, like the dot-com bubble, where what you had was infrastructure outrunning actual output, okay? And it's the same thing that's probably happened now with AI, okay? Have we benefited from the AI trade? Definitely, right? But really through companies that are also involved in other things, right? So there's no investment in anything that's
So you're not
exclusively AI
consolidating.
only.
You're not sort of drilling down.
You can't, because you have to diversify your portfolio.
And
Yeah.
other than in the tech sector, what other spaces?
Healthcare, financials, industrials, energy, consumables. So there's a broad scope.
And you have
right?
anything in emerging markets?
We do invest in emerging markets as well.
Okay.
So that's how we get our global exposure. We get our global exposure through investments in ETFs, and that covers emerging markets. You're looking at places as far afield as New Zealand, Australia, Japan, China,
Excellent.
Canada, the UK.
So
And
you have
that's- that portion of the equity portfolio alone is about 40%.
Before you go to break, can you tell the listener where they could find more information on UTC Global Balance Fund, so they could look online and see exactly what is on offer?
Yeah, so our website, www.utcgbfl.com, and any of our social media handles, Instagram, Facebook, LinkedIn, UTCGBFL. Our annual report was released last week, so people can have a read there as well.
That's bedtime reading.
Yep.
All right, so we're going to take a quick break here, and after the break, a little more on UTC and other aspects of the investment climate in Saint Lucia. See you after the break.
Stay tuned. We'll be right back.
To experience the benefits of a tropical solar water heating system, call 453-1868 in Castries or 454-6344 in Vieux-Fort.
Now, you speak about 10% annualized return of the life of the fund so far. Put it in context for the average listener. What does that mean if you're invested in the fund and you're doing 10% on an annual basis?
Right. So if you're averaging 10% on any investment, right? Let's just say you started with $100. That $100 after the first year now is $110. Okay? For argument's sake, let's say you've not added anything or you've not sold anything. You are now earning 10% not on $100,
110.
but you're earning 10% on $110. So in year 2, that investment is now worth $121. Okay? So you've now earned an additional $1. Right? You've earned an additional $1 just from what you earned the year before. Okay? So that's 2 years. So to the 25-year-old listening, just imagine if you're doing this now for 35 years.
Yeah.
Or to the 40-year-old listening who said, boy, I should really start investing a long time ago.
After
You
10
still
years.
have 20 years, because average retirement in Saint Lucia is about 60. You still have 20 years to do this thing. Okay? So replace $100 with $1,000. And those who can, replace $1,000 with $10,000.
So rather
And
than
at
10,000.
that run rate, Stephen, your money actually doubles after 10 years.
Yep.
All right? So now just imagine if you actually add into it the impact that you'd have. So what I always tell folks is
That's compounding.
it's compounding. Yeah. That is the impact of compounding. Interest on interest. All right? So in a mutual fund like ours, it's important to remember that even though we're averaging a certain amount, you're not guaranteed to make that amount every year. So 2024 was 12.76, 2025 was 8.73, total 21.5, average 10.75%. I cannot say where we land this year, but let's just say we continue with the trend. You may find that we're higher than the average. Okay? So some years are up, some years are not so far up, some years may even be down, but the average over time is what will really give you that value creation. And you're compounding now in the bank. It's just that you're compounding
At a much lower rate.
at a much lower rate. And your listeners must understand that don't ever take all your savings and invest. No, you have to have savings. You need
What's a mixed portfolio for you in terms of a mixed balanced portfolio between mutual funds, real estate, cash, and other securities? What would that look like for
It
you?
really depends on your risk appetite. So let's just say you're an aggressive person. You'd want to go heavy on stocks. You'd want to go heavy on growth mutual funds, right? If you're a more balanced, more moderate investor, you do some mutual funds, you do some bonds, you might have some stock in your portfolio. And then, of course, you might take on some real estate that's income generating, right? And the conservative investor would do savings accounts, fixed
Real
deposits, a lot of real estate, right? My ideal for somebody who's between, say, 30 and 50, give yourself some opportunity to earn, okay? So you can be slightly above moderate, right? And have mutual funds, do some bonds for the fixed income side. Ensure that if you're doing real estate, that you have your numbers covered, okay? Because one of the things that people ignore in real estate, Stephen, is the hidden costs.
Yeah, exactly.
The hidden costs, interest on the mortgage, insurance, maintenance, property taxes. So ensure that you have that covered, all right? And then as you get older, because your earning capacity now becomes less, it decreases with time, especially if you're a salaried worker, move from more moderate into slightly more conservative, but still maintain investments because you might retire with a gratuity or you might retire with a nest egg and say, well, boy, I'm okay. But inflation will impact that.
So when you're younger, you could take
Go
it more
aggressive,
aggressive. As you get older, you
Yeah.
already have the benefit of compounding your investment. You could start moderating your risk appetite.
Correct. Yeah.
So I could tell there are lots of people out there trying to figure out, okay, I have X amount of money in the bank. I really want to benefit from this product that is being sold by UTC. Tell our listeners step by step tomorrow what they need to do.
Right. So it's no different than opening a bank account. If you are tech savvy, you could go onto our website and sign up right there. So utcgbfl.com, and there's an onboard tab that you could just sign up, complete the form. It's very simple. Upload all your documents. The office will be in contact with you almost immediately. If you are more traditional and you like the touch and feel of someone, you can come to our office. We're located in Rodney Bay, just after Big Chef. All right? One of our advisors will be happy to walk you through the process. Again, it's really you complete a registration form, you complete a residency form, you complete a subscription form, 2 forms of ID, proof of address, proof of income, no different. And we accept EC. It's a US dollar fund, but we also accept EC, right? So a simple electronic funds transfer from your phone or from your laptop. You don't need to go into Republic Bank where we bank to make the deposit. No, you could really do everything from the comfort of your home, right? And one of the things I forgot to add, Stephen, is GBFL is a liquid fund. So you could actually sell your shares at any time.
But if it's liquid, does that mean that you could sell, you get your return immediately? How long does it take to sell? Or do you have to go to the market?
Your returns are a function of the time between when you buy and when you sell.
I know, but how long? Would you have to go to the market to sell? Or
No,
would
you sell back to the fund.
Oh, okay.
You sell back
so
to the
you'll
fund.
absorb whatever.
Yeah.
Very
So
good.
nobody goes to Stephen and says, well, boy, I'm in a tight bind. Can you buy these GBFL shares? No. You sell back
To GBFL.
Sell back to GBFL.
Very good.
Yeah, it's
very
a simple
good.
redemption.
Thank you so much, Omar. That was very clear. And those of you interested, check it out online or go to the offices for more information. See you after this break.
This podcast is brought to you by IBS, Harbor Club, Tropical Solar, and 1461 Enterprise, distributors of the world's best coffees.
Welcome back. So before we wrap, I think it's important for us to speak about financial inclusion, educating the general public, Tell us more about, the phrase financial inclusion. What does it mean to you? And what does genuine financial inclusion mean? And how can you and UTC support that?
Yeah, so financial inclusion for me is really ensuring that everybody has A, access to a savings account, B, they can access basic financial services, be able to do a transaction using a debit card, doing a transaction online. That's the basic. But beyond that, we need everybody to have access to investments, right? Everybody has something that they're planning for, whether it's some goal related to a child, whether it's retirement, whether it's simply just wealth creation. Destigmatizing that investments is for a certain class, right? The bourgeois, as we say. And allowing people to understand that all you need right now is really willpower to get started and giving them that confidence that they need. One of the things I always tell my colleagues in the financial space, financial practitioners, that you must never be too judgmental or talk down to people. Understand their story. Don't make light of a mistake that they've made in the past, because our role is to give them the tools that they need to make the decisions for the benefit of themselves and their families. There's a term we don't use too often in Saint Lucia, Stephen, and that's generational wealth, right? We don't think about it because to a lot of us, it's not attainable, right? But we want to start changing the mindset around that and understanding that, yes, if you start with 100 US, you may not be able to develop to achieve generational wealth in a short space of time. However, starting is the first step
To getting there.
to getting there.
And education, how do we then, because one of the things which you touched on, which is missing, is, let's say, hardwiring that philosophy of financial inclusion, investment, financial literacy into our educational ecosystem. And of course, the brokers, the mutual funds, would of course have a role to participating in that education, but it's really from the kindergarten.
Yep.
How do we enhance financial inclusion through education, and what would be your advice on that?
Yeah, so you need to get out there, right? We can't just stay in our silos and say we need more education. So we've been walking the talk. For this year alone, we've done 3 webinars.
Wow.
Covering different topics. We did a seminar in Beaufort 2 weeks ago, did a seminar in Antigua in January, did a seminar in St. Vincent in March. We'll be in Grenada doing seminars next week as well. We've visited a number of schools across Saint Lucia and in every other OECS island, except Anguilla and Montserrat. Always really impressed when I meet with those students. Stephen, I asked a question of a young lady in St. Vincent. I said, well, why is investing important? She put her hand up and she said, it's a good hedge against inflation.
Oh, wow.
And I was impressed.
I hope you hired her.
I said, you know what? We're heading in the right direction.
Yeah, she
right?
knows.
So that sort of warmed my heart. But one of the things that I'm always buoyed by when we have these seminars and you meet people and they say, thank you for the information. I've been wanting to do something for the longest while, but I didn't know how to start. So education is key. And sometimes I tell my team, we have to sell, but we also have to take our time in ensuring that we arm folks with the information that they need. And I always preface any talk that I give by saying there's no stupid question. Okay? There is no stupid question. You need this information. And we're here to give it to you. So I made the point earlier about our curriculum, and I think it needs to find itself in the curriculum. Because we scratch the surface, Building wealth is simply just compounding.
Compounding.
We do compounding in what? Standard 4?
Exactly.
Form 1?
Exactly.
But we never really made it relatable. Why is this important? Einstein said it's the 8th wonder of the world. And it's true. That's how you really start to build wealth.
Compound.
When you see you earn interest or you earn returns on an investment, and those returns are earning more returns. Or making little ones, as they say.
You're saying you're making your money work for you.
Making your money work for you. That's how your wealth compounds. And that's where we sort of miss the trick. We teach these concepts from a technical
But not
standpoint,
relatable.
but we've not brought it home. We've not made it relatable.
Now, there is, let's say, all hope is not lost. There are many young people right now looking to invest in real estate, in crypto, in equities. but they don't have any structured guidance. They don't have the facility. What advice would you give to those young people who really want to participate, but they don't have the guidance and they're not sure how to take the next step?
Yeah, I'm really encouraged by the energy of young people. So that's a good thing, right? The fact that more young people are taking a serious approach to investing and building wealth is excellent. One of the challenges we have, however, is there's a lot of misinformation on social media, right? And there are things that sort of mislead a lot of young people and some older ones as well. First things first, you need to fundamentally understand that investing is really a slow, disciplined process, right? It's really boring.
No get rich quick
Correct.
scheme.
Yeah. So somebody's telling you that you can make 3 times your money in 2 months. It's probably a pyramid scheme or a Ponzi scheme. So it's really to take a step back and say, you know what, all right, if I'm really serious about investing, this is what I'm investing towards. I have short-term goals, I have medium-term goals, I have long-term goals. Let me assess what options that I have, right? If it is that you want to invest in cryptocurrencies, you need to do so with being mindful that A, this is extremely risky and I could lose my money, right? B, it's unregulated, right? So if I put my money in and something happens, that's it, it's gone. Understand the risk that you take in if you go into invest. Similarly with real estate, understand that real estate can be very illiquid, all right? And if it is that you invest in real estate, you need to have a plan. What are the cash flows that you expect to generate from this real estate? How much more capital do I need to really make this value adding for it to start generating some income and truly be an investment, right? What's the upside here? If I'm buying land in a certain area, what's likely going to be the valuation in 5 years? Or you have a situation where people have bought land in Saint Lucia in areas and the value hasn't moved in 10 years. So these are some of the questions you need to have. Don't just do it because it sounds trendy.
Or you see it on TikTok.
Or you see it, oh God, or you see it on TikTok. Yeah, I mean, I don't know if you knew this, Stephen, but last year we had a pyramid scheme go up in flames. A lot of people lost a lot of money. And there was some of my colleagues, they laughed at it. And I said, well, you can't laugh because everybody is just trying to get into investing and they need proper guidance. I told somebody, I said, the fact that so many people invested in a pyramid scheme,
It's appetite.
It meant that there's appetite, but it meant that we're, as practitioners, we're not doing a better job amplifying the options that we have and amplifying the regulator.
Because if you can get 12%, I mean, of course, that's 2024.
Yeah.
But if you get between 8 and 12%, I mean, you're doing well.
Exactly.
And again, the compounding benefit of that type of return would be, interesting for everyone.
Precisely, yeah. And yeah, I mean, to plug in GBFL again, year to date, we're over 6%. So we're looking at a total return, 31 months in existence, total return on the fund has been close to 30%.
Wow.
So you're averaging north of 10%.
Wow.
That is an excellent return.
So we have conflict in the Middle East. We have conflict in Europe. We have supply chain disruptions. We have hunter virus. We have escalating or elevated energy costs, escalated travel costs. We have the impact on transportation networks and the cost of transportation and moving goods. So we have going through an inflationary cycle because of those realities. Does that keep you up at night?
No. Because with everything that happens macroeconomically, there's always opportunity, right? So first things first, our primary responsibility is to manage the risk around these things, right? Once we've done that, then you look for the opportunities, okay? So if oil is rising, what does that mean? The value in energy companies will also increase, right? If there's inflation that then requires, say, an increase in interest rates globally, what that means is the yield on new bonds will be higher, okay? So there's opportunity there. As a responsible financial practitioner, and I might get technical, you might say, okay, let's sell down, right? Core inflation is up. They're saying that it may not be transitory. Transitory meaning it may not be temporary, right? That it may be something more permanent. So how do you navigate around that? I always tell folks,
Don't be Jerome Powell of your transitory claim. Go ahead.
I always give this story. I say, folks, I furnished a kitchen during the pandemic, okay? I bought stock in 2 companies that were severely undervalued because there was pandemic panic, and I sold them 2 years later.
You
And
got
I
a
was
handsome return.
able to furnish my kitchen. So there's always opportunity when there's some downside. The question is, the key is to understand what level of risk is involved in trying to leverage or take advantage of these opportunities, and not trying to time your entry and your exit into the market, Stephen, but spending time in the market. Don't time the market, spend time in the market. You just listed off a bunch of things, and I can go back. We've had COVID, we had the war in Ukraine, we've had 9/11, we had the global financial crisis, you had the Oklahoma City bombing. In all those instances,
The market return.
what you saw was the market rebound, right?
So you believe in dollar cost averaging.
Believe in dollar cost averaging, stay in the course, having a long-term
But
philosophy.
you have to have confidence in the underlying asset.
You have to have confidence in the underlying assets, and that's why a mutual fund is ideal, because it's not just one asset in there. Okay? You have assets from all over the globe.
So-
And that's really why you do it, to ensure that no one asset class or one asset will have an outsized impact on your investment.
So, closing question. You've done well. Successful in the responsibilities that you've had. And from all accounts, you're delivering on this latest responsibility. Omar Burch-Smith, where do you see yourself in 10 years?
Hopefully, still in the Eastern Caribbean securities market, in a market that is more developed, way more participation because of the work that myself and others have done. Really hoping to see an ecosystem now where not only investors can thrive, but users of capital can thrive. It's something that I'm very passionate about, in terms of seeing the ability of capital to really find itself in the hands of those who need it, right? That's the next phase of our development as a securities market, as a capital market, developing that part of it. So I'm hoping that I play a central role in that, as well as continuing to build education, financial literacy, access to investment, for the retail investor, but also developing that ecosystem whereby we could start seeing now that mismatch of capital and ideas, that gap decreased. And that's when you're going to see real economic growth, Stephen. Because that's really when an economy takes off. When small businesses now have the ability to thrive and really scale and develop. That's really when you're going to see marked economic growth and wealth creation in our country.
Thank you so much for sharing your story and for informing us on the products that you have on offer and the potential in those products to create more wealth. For those of you listening and watching, before you log off, if you like this content, like and subscribe, and look forward to the next episode of the 1461 podcast. Thank you for joining us this evening.
This has been the 1461 podcast. Thanks for watching. Follow us on Facebook, Instagram, TikTok, and Spotify.
The Airborne Academy, official audio partner to the 1461 podcast.